the impact of Trump's coming back on China's economy will be huge. At present, China's domestic demand is close to collapse and can only be supported by the international market, so high tariffs are fatal to China's economy.
After China joined the World Trade Organization in 2001, it became the world's factory, and its average annual export growth was 1.5 times the GDP growth. Exports have been the fastest of the three horses of the Chinese Communist Party's economy for many years. It is estimated that China's exports currently account for 14.7% of the international market share, ranking first in the world for 14 consecutive years. According to data from the World Bank, China's exports accounted for as much as 36% of GDP in 2006. But by 2009, it fell to 24.5%. In 2018, the proportion of exports in GDP stabilized at around 19%. In 2023, the proportion will be about 19.74%. In 2023, China's total import and export value will be 41.76 trillion yuan, of which exports will be 23.77 trillion yuan, an increase of 0.6%.
The Chinese government claims that the GDP in 2023 will be 126 trillion. From the perspective of demand, the three driving forces of China's economy are exports, consumption, and investment. As we all know, China's statistics are inflated. From the various signs reflected by the public, China's consumption and investment have already fallen off a cliff and are currently supported by exports.
Therefore, the proportion of exports in GDP in 2024 is estimated to exceed 36% in 2006. If the United States and other countries in the world adopt a high tariff policy, it will be a fatal blow to the Chinese economy, and it may collapse in the next 2 years.
Trump began to impose tariffs on China during his previous term. In March 2018, Trump announced a large-scale tariff increase on goods imported from China. In July and August 2018, the United States imposed a 25% tariff on $50 billion of goods imported from China in 2 batches.
In September 2018, the United States imposed a 10% tariff on $200 billion of Chinese products exported to the United States. The Chinese government imposed tariffs on $60 billion worth of American goods. The United States has imposed tariffs on a total of about $370 billion of Chinese products exported to the United States. Since 2021, the Biden administration has not only continued the tariff increase measures, but also decoupled and cut off the chain and eliminated risks from China, built a small courtyard with high walls, and engaged in friendly shore outsourcing. However, the number of China's exports to the United States has been growing in recent years. From 2017 to 2020, China's exports to the United States remained at around $450 billion, more than $570 billion in 2021, $580 billion in 2022, and $500 billion in 2023. It is expected that China's exports to the United States will exceed $500 billion in 2024. In the first 10 months of 2024, the total trade value between China and the United States was 4.01 trillion yuan, about $550 billion, an increase of 4.4%. Among them, exports to the United States increased by 4.9%, imports from the United States increased by 2.9%, and the trade surplus with the United States was 2.07 trillion yuan, close to $300 billion, an increase of 5.8%. During this election, Trump took a tough stance against the CCP, saying that he would impose the highest tariffs in history on Chinese imports. The first measures Trump will take after taking office may include canceling China's most favored nation treatment, imposing a 60% tariff, and imposing higher tariffs on electric vehicles produced by Chinese companies in Mexico and then exported to the United States. Among China's exports to the United States, mechanical and electronic equipment such as mobile phones, computers, lithium batteries, etc. account for more than 40% of China's exports, which is expected to have a great impact on the export of these products. The profits of the above products should not be more than 60%, so the imposition of a 60% tariff means that China's direct exports to the United States are blocked. However, inflation in the United States is very high at present, so consumer goods may not be subject to such high tariffs. But overall, China's exports to the United States will be hit hard. The decline in foreign trade has a great impact on the employment, income, and consumption of Chinese people. In 2024, the number of foreign trade enterprises with import and export records exceeded 600,000. Among them, there are 556,000 private enterprises, with a total import and export of 22.36 trillion yuan, accounting for 53.5% of the total import and export value. State-owned enterprises' imports and exports amounted to 6.68 trillion yuan, accounting for 16%.
Data show that in 2021, foreign trade has driven 180 million Chinese jobs. If China's foreign trade volume drops by 30%, the corresponding number of unemployed people is estimated to reach 60 million. In addition, many Chinese companies will avoid high tariffs. For example, large Chinese companies such as Haier and Midea are also investing abroad, which will inevitably affect domestic employment.
Many foreign enterprises, including Europe, the United States, and Taiwan, will also leave to avoid high tariffs. In 2023, foreign enterprises' imports and exports amounted to 12.61 trillion yuan, accounting for 30.2% of China's imports and exports. Once foreign enterprises withdraw, China's imports and exports will be greatly impacted, and will also affect the employment and income of tens of millions of people. All of the above will further hit China's consumption and investment and severely damage the CCP economy.
Secondly, Trump's high tariff policy will also have a greater impact on the RMB exchange rate. Trump won the election on November 6th. As the dust settled on the U.S. election, the global exchange rate market has staged an epic shock.
The U.S. dollar rose strongly, and the U.S. dollar index soared by more than 1.8% during the day. Non-U.S. currencies around the world are facing huge depreciation pressure, and emerging market currencies are under obvious pressure. Among them, the Mexican peso led the decline, falling more than 2% against the U.S. dollar, hitting a two-year low. The impact on the offshore RMB exchange rate was almost synchronized. On November 6th, the U.S. dollar to offshore RMB exchange rate was 7.1765, with an intraday low of 7.0907, and the maximum intraday amplitude rarely exceeded 950 basis points. If Trump imposes a 60% tariff, it may cause China's overall exports to decline by 10%. Therefore, in order to cope with the decline in exports, China should push the RMB exchange rate to depreciate, and it needs to depreciate by 5 to 10% to cope with the overall decline in exports. However, the United States may also believe that China is manipulating the exchange rate. In any case, in order to protect foreign trade exports, the RMB is likely to depreciate. Goldman Sachs expects the RMB to drop to around 8.0.
China's exchange rate is non-market based because international currencies cannot enter and exit China freely, so the Chinese government can control the exchange rate. The United States and many other developed countries let the market determine the currency value, which generally only indirectly affects its value. For example, the Federal Reserve will make the dollar stronger or weaker by raising or lowering interest rates. In China, officials set a benchmark exchange rate for the yuan each day and allow traders to push its value up or down within a set range. Officials then determine the exchange rate for the yuan the next day based on trading activity, and it is difficult for outsiders to know the details of how this works.
If the yuan continues to depreciate, it may have a greater impact on the world economy. A depreciating yuan will cause losses to American exporters and weaken the effectiveness of Trump's tariffs. It will also affect exporters in Europe, Japan, and other regions. In addition, it will put pressure on South Korea, Taiwan, and other places that compete in similar industries to depreciate their currencies, which may disrupt trade and investment flows.
The Chinese government will adopt a series of monetary and fiscal policies to respond to high U.S. tariffs. After Trump takes office, he may accelerate the pace of the Federal Reserve's interest rate cuts. If the United States adopts a policy of low interest rates, high tariffs, and low tax rates, the Chinese Communist Party is likely to increase monetary and fiscal easing. In the short term, it may play a certain role in promoting the economy, but in the long term, it may cause severe inflation in China.
For China's real estate and stock markets, the situation may deteriorate further. Trump's tariff increase will affect foreign trade, especially Guangdong and Shenzhen. Foreign trade accounts for a large proportion of the economy in these two regions, so the impact of the decline in foreign trade will be relatively large. Therefore, the income of people in the industry will be affected, thus affecting housing prices. If the country is about to launch a trillion-yuan real estate acquisition plan, it may provide some support for real estate, but in the long run, due to the sharp decline in China's birth rate and the accelerated aging of the population caused by family planning, China's future real estate demand will be even weaker. The CCP will stimulate the stock market to rise in the short term with the massive money supply. However, if Trump's policies cause a severe blow to the Chinese economy, the Chinese stock market will also collapse. Trump's policy is to rebuild the industrial chain in the United States, such as transportation, electricity, technology, high-end manufacturing, etc., to reduce dependence on China's manufacturing industry. China's corresponding high-end manufacturing industry will be impacted in the long run. In other aspects, the United States will withdraw from the climate agreement, increase U.S. oil production, reduce oil prices, and reduce inflation. The United States will also continue to implement more stringent technology embargoes and technology blockades, and it will be very difficult for China to continue to steal American intellectual property in the future. China's high-tech industries will be hit hard. Trump's presidency will end the Russia-Ukraine war as soon as possible, and the Chinese Communist Party may be afraid of Trump's deterrent power and dare not provoke wars everywhere. The world will be more peaceful.